BlackRock CIO of Global Fixed Income, Rieder, joins us now from the NYSE balcony. He just finished ringing the closing bell to celebrate BlackRock's ESG Capital Allocation Trust's first sustainable closed-end fund offering. Rick, good to see you. Thanks for joining us.
Thanks. That was a mouthful. Thanks for having me.
It was a mouthful. Congrats on the celebration, I guess. What about the bond market? What is this move up in yields telling you? And should you be rethinking your stock market allocations accordingly?
No, I don't think so. Listen, we had, you think about what happened over the last couple of weeks in terms of there was a huge amount of supply of fixed income that came to the market. You had literally $600 billion when you take all the gross supply of fixed income that came to the market. And you've got a Fed that's pulling back a bit. And I think you have to put a little bit of perspective. You had supply coming, you have a Fed pulling back a bit, and we've had negative real rates. The 10-year has been, and I think the tightest it got was negative 113 basis points. That's wrong. That is mispriced. It took, we're getting to levels now. I still think we can go a bit higher in yield, but we're getting to levels that are going to be, I think, are going to be stabilizing. So the market's got to adjust, because when you get moves like you've had the last 2 or 3 days, people want to know how much more are we doing. I don't think we're going to do that much. In fact, I'm certain we saw some buying coming in today in the rates market. So I don't think we're moving that far. So I wouldn't adjust the equity allocation. Quite frankly, I think you get days like this, it's a neat opportunity to actually put some money to work.
But put some money to work where?
So, we like the areas we like. We certainly like technology. Today was a great day to add to some technology names, particularly some of the big cap names that are building incredible amounts of book equity. So there's a place. Healthcare is a place that also got hit today that I think putting some money to work there makes some sense. I actually like some of the industrials, and I also like some of these retailers that have come to market. We're doing a little bit in the European banks, but I think you get days like this, particularly those sectors that are building book equity and they're creating 20 to 30% ROE. Well, you get a good chance to buy some, and quite frankly, a number of them don't trade at excessive multiples. So, the financials one is interesting. I like European financials a bit more. And, you can express your rate view if you trade fixed income or you're in the fixed income markets, I think, more effectively than doing it through financials. But we own some and we think they're okay, but we're not adding to them.